What's up, people, and welcome back to Markets Rally. Today we're going to be looking at the Apple's most recent event. We're going to be looking at the US election, taking a deep dive into how that affects the markets. We're also going to be looking at the coronavirus situation, the recent news on that, and the recent news on the new vaccine, the UK furlough scheme. And then we're going to finish off with an article, Young But Not Dumb, which highlights why we should start taking young investors more seriously.
Thank you, Sam. This seems like deja vu, but let's start with Apple.
They are back. I'm not talking about me and you, I'm talking about Tim Cook. Some people call him Tim Apple. So we saw the return of the Mac. and Tim Cook is now back with Apple's third event in the last 2 months. You know me, I'm a huge Apple fan.
Yep.
And we had the One More Thing event just this past Tuesday. For me, 3 events in the last 2 months, it's like Christmas basically. It's the next best thing to Christmas for me.
Yeah.
And the transitions we saw from Apple, again, it didn't fail to deliver. It's been a minute since the release of the first Mac in 1984.
A minute.
I say a minute, over 35 years. So, you know, Apple, they make computers, right? You know, they make laptops.
Yeah.
They make towers, you know, they make all these PC tower, that's what I mean.
Yeah.
And you know, on the Tuesday event that we just had, it was a huge day for me. I've been really looking forward to it. And they unveiled a brand new custom-made computer chip. And that's going to be replacing Intel's chip, which was used previously in the Macs since 2006.
Yeah. Yeah.
The new chip is called the M1 chip.
Yep.
And it will start to ship in the MacBook Air, the MacBook Pro, the Mac Mini. Whole
that
family.
sounds like a burger.
Oh, it's getting hungry.
Mac Mini.
No, I prefer a Big Mac. So this means Apple will, as well as building their own software and now building their own hardware from the bottom up, we'll be seeing them produce their own processors. And that means we'll be getting seamless integration between their hardware and the software, which is going to be making things a lot smoother on the new MacBook Pro Air and the Mac Mini.
Mm-hmm.
Obviously, as you'd know, in the previous Macs, we had the Intel chips, and that means we had separate chips for the GPU, the CPU, the security, the memory, and now it's all on that one chip, on the SoC. So that's going to make things like I said, a lot more smoother. It's going to make things lighter. It's going to make the MacBook devices, the Mac Mini lighter, thinner, because it's just one chip now.
That's always good.
And that's going to improve, again, efficiency. It's going to mean better power, longer battery life. Up to 20 hours on the MacBook Pro for a video playback. You know, no one wants to carry a brick, Rob. No one wants to carry a brick.
Yeah, I agree.
No one wants a laptop that sounds like a jet engine. If you want a laptop that sounds like a jet engine, you buy jet, right?
Yeah.
So you buy a jet. No one wants a devices that gets hot when it's exporting 4K videos. No one wants that.
What if you're cold?
Bro, I'm not living in South Shetlands in Antarctica, mate. I don't need a hot device when I'm trying to export a 4K video. So no one wants that.
But the question is, will you buy one?
Whoa, slow down there, Rob. Where's this money coming from? No, to be fair, with the new M1 chip, I think it looks really great. It looks really promising. We saw some amazing taglines. You know, the ability to for the first time, you can run iPhone and iPad apps on the Mac. With the release of Big Sur as well, you can actually explore cities in 3D. I know this is something that you like to do. I know you're an adventurer. You like to explore the city. So now you can actually do that all from the comfort of your own home. You don't need to go to New York and explore. You can just do it on your laptop, on your MacBook. I know this is already on Google Maps, so it's coming to Apple, which is great. You can do it in 3D, so you can explore cities in 3D. We also saw the huge taglines. I can see them right now. It's we can see 2 times faster CPU performance compared with the latest laptop chip. We saw 2 times GPU performance than the latest PC laptop chip, and that's going to give us faster graphics performance. And you know me, man, I get a little excited. Yeah, I see these things and I'm like, whoa, I get a bit tingly. But recently I was just like, wait a minute, you know, am I one of those people just sees these taglines and gets too excited? Is Apple tricking me? Am I getting tricked? am I getting bamboozled?
Yeah.
Are they pulling the wool over my eyes? It's the question. It's the question I'm asking. We saw all these demos. We saw all these unlabeled graphs, and we didn't see any benchmark scores. We didn't see any performance comparisons. So I would say I'm really cautiously optimistic.
Yeah. Understand.
I want to see these devices before I actually understand if they're actually really good. If they're good enough, if they're better than the Intel Macs we saw previously.
Yeah, you're taking precautions. Yeah.
Of course, yeah. I'm risk averse. I have to be safe here. So I would say, in answer to your question, I have placed an order.
As expected.
Yeah, I've placed an order.
For how many?
Just the one. And that's for the MacBook Pro to see what it's like. But you know what I'm really hoping for, Rob?
Go on.
I'm hoping that, I know Apple spends approximately $4 billion on Intel chips every year. So I'm hoping that this in-house chip that you're making the homemade chip that you're making, custom made is the word to be used, that you're making. I'm hoping that that's going to save Apple that $4 billion that they're spending on Intel chips. And that can actually be translated to cheaper MacBook prices. Just for people like me. That's what I'm hoping for. Let's see if that happens.
Yeah, that's reasonable.
Stop the count. Any votes that came in after election day will not be counted. Ballot counting abuse. Big legal win in Pennsylvania. I won this election by a lot. So I'm obviously just reading out some of the tweets from Donald J. Trump. This is not things I say on a daily basis. So obviously, pre-election, we covered on our last show our expectations of what the election would look like. We talked a lot about this incredible blue wave that we were expecting to see, which is Biden winning the House, Democrats winning the House and the Senate.
Yeah.
And obviously, we had the election just over a week ago, last Tuesday. And it was tense, I felt my blood pressure going up. It was quite, I was staying up late to watch it.
Yeah.
We weren't getting any information on who's won. Of course, it was taking such a long time because there was a delay in the counting because of some of the votes that came via mail-in ballot.
Yeah.
But we talked about all these swing states, the swing states. And we talked about Texas, we talked about Florida. Trump won them comfortably. But then we also saw some of these tweets, stop the count, the huge one. And he was threatening to go to the Supreme Court. He said that he would ask the Supreme Court to stop the election count without a winner being declared, which is huge, something I've never seen a president do before. So, of course, we saw Biden won. Yeah. And he's now the president-elect. And we have our first female vice president-elect.
Yeah, huge. Congratulations.
A huge congratulations to Kamala Harris. But it wasn't a landslide as we were expecting. We were predicting a landslide. Can you tell me what's the impact and what has been the impact of this election on the market?
Yes, Sam, you're exactly right. Investors were expecting a blue wave, as you mentioned, but it wasn't turned out as blue wave.
It's light blue wave.
We had the colors mixed there.
Yeah.
And we saw a little bit of rally between growth and value. We saw volatility in treasuries, which we haven't seen during this crisis. Let's start from the pre-election day.
Monday.
Yeah. We started to see that industrial stocks started to edge a little forward. That was because investors were betting on the blue wave. We had the spending pledges from Biden, and that would, of course, help these companies. And as a result, technology stocks took a little step back because if there was a chance of him becoming president, we would see more regulatory oversight over the technology companies. Similar picture in Europe: energy, financials, industrials, all doing good. What helped Europe was also the IHS Markets Purchasing Managers Index for manufacturing sector. It hit highest reading in September since July 2018. So really, really positive news for the continent. And that also helped the oil prices to nudge a little higher. On the election day itself, we saw the treasury yields. They went up by 0.04 percentage points, highest level since early June. That was because of the spending pledges by Biden. But all that took a turn on the day after Tuesday, which is Wednesday, the 4th of November. We saw that the race for the president were much tighter than we expected. So the blue wave was put on sidelines. And that resulted in technology stocks taking the lead again. Nasdaq advanced 4%. And really the big expectations from Biden to spend on infrastructure projects took a hit, and that resulted in treasuries sliding 0.13 percentage points to 0.77%, biggest decline since April. Overall, it was a good week for the stock market. Best week since April. S&P advanced 7.3%, Nasdaq advanced 9%, but it was very turbulent trading, both for stocks and for treasuries, bonds. What really helped the bond market was the better than expected employment data on Friday in the US. That prompted treasury yields to notch a little higher. We're facing a divided government, and overall analysts say that that's good for the markets because, of course, we have the taxes, we have the overhaul of the legislation and regulatory oversight of these companies, and that really made the volatility go down a little. The VIX dipped to 25, which is still above its long-run average of 20, but still a lot lower than it was before. Same picture in Europe, and also the FTSE All-World Index of Global Stocks up 7.7% last week.
So that's interesting. Obviously, Monday, the 9th, we saw huge news. Massive news. We saw there could have been a vaccine breakthrough for the COVID pandemic we're all dealing with right now. Huge news for markets, huge news for us personally, because I want to get out there. I want to start walking again. Well, maybe not walking again, but I want to get out there. And it was massive. So we had the news from Pfizer and BioNTech, which suggested that we've finally we've reached a milestone in the race to finding a COVID-19, a coronavirus vaccine. And this vaccine is saying it's more than 90% effective. So that's something that's huge for the markets. The Nasdaq Composite, which is mainly, it's technology stocks index, and we saw that go down by 1.5% on closing on Monday, simply because, if we're going to be going out there more, we don't necessarily need technology as much as we've been relying on recently. So,
makes sense.
Things like Zoom went down by 17%. We saw Ocado listed in the UK go down by 12%. HelloFresh, the meal delivery service, went down by 15%. So that all culminated in the Nasdaq stock index going down by 1.5%. And then we saw the economic stocks like the airlines, hotel, aeroplane makers. These stocks, we saw huge increases in them.
And you can see the reasons why. Of course, the oil hit a really high level as well, 42, really good. But of course, then we had the news of the vaccine might not be as hopeful for us as it.
Yeah, well, we need a bit of optimism, Rob. Jesus Christ. But that's the news, to be fair. You're right. We had the news that actually we might be staying at home for a longer period of time. And actually COVID may not necessarily be going anywhere anytime soon. So actually the home working, the online shopping might be here to stay in the long term. In fact, companies might be changing the way of working, their ways of working. So these news were starting to filter into the market, and actually we saw the Nasdaq then jump 2% following some of these news. Of course, we have distribution. This new vaccine, if it is successful, we're hoping it is. It has to be distributed. There could be distribution issues there. It might take time. So this is just the market being agile, reacting to these different potential situations. But hopefully let's be optimistic. I feel optimistic. We're hoping that we get the vaccine mid to late December, and we might not see real distribution across the global economy until the end of December 2021 next year. So we have to wait for that.
Investors were really expecting to see a little rotation into more value stocks, from growth, from technology to more economically sensitive stocks, but I think that will take longer to realize, and of course with the pandemic as well, that might take a back step, and we're likely to see this happening down the line.
Absolutely. Yeah. Okay, so let's move on to the next article. It's called The Zombification of Britain. This is an article from The Economist. It sounds quite scary, zombies.
It's more for Halloween.
Yeah, exactly. So the article starts with why Rishi got it wrong. So Rishi Sunak, the Chancellor of the Exchequer, they mentioned in the article that he should not have actually extended the furlough scheme, which is quite controversial. And the key reason that the article highlights is allowing obsolete jobs to wither and new ones to blossom is actually one of the main ways in which capitalist economies get rich and productive. So actually letting these roles actually wither is a good way to get the economy to adapt really to changes. What do you think about this fellas? Do you know what it is? It's like,
well, the furlough scheme in Britain is a scheme which supports employees during the crisis. It pays 80% of workers' salaries, and Britain's approach is similar to countries around the world and Europe as well. But one thing is that this scheme is extraordinarily generous compared with other schemes. Close to 10 million workers, 30% of the workforce were supported by the furlough scheme during the midst of the pandemic. And it's really, France is close, but still not as close to 30%. It's just around 20.
So I think economically, obviously this is the Economist we're reading, they're saying it's not a great idea. But politically, it's a great move. It's a smart move for Rishi Sunak. But is there a possibility that actually what we're doing here is protecting jobs that wouldn't necessarily be required for the future?
Of course, that's one of the main reasons the Economist argues against extending the furlough scheme. It argues that at least 1 million jobs supported by the new furlough scheme represents about 3% of workforce are unlikely to survive in the long run. It points to the cost of supporting this scheme, but what's more important than the cost is this argument: retarding economic recovery by discouraging the reallocation of workers from dying industries to growing ones. I think that's a key argument, because furlough scheme keeps people into job, whereas if you look at if we compare it with America, for example, they took another approach. Instead of supporting employees to stay in their current positions, it was very generous. And
so what did America do then? Yeah,
it supported their incomes instead of wages.
Okay.
And salaries. So
you would be, for example, if you're an American, you would just get like a check for the
exactly.
For the
yeah.
Okay, that's interesting.
7 out of 10 unemployed Americans earned more from benefits than they had done when they were still at work.
Well, I feel like if you're, for example, an American in that situation, you get a check through the door, you don't feel tied to the employment you were working in the past. So actually you're thinking, well, I'm getting this amount of money coming in, I need to start a business maybe.
And you're earning more than you were.
Wow.
By these benefits.
By not working?
Yeah. Okay.
So you can actually invest in a new business maybe. You can actually start finding new firms to work for.
That's what we have seen in America, this explosion of small business creation. But there is hope. At the end of the tunnel, Economist points out that there is still a chance for these furlough scheme to be taken off, and instead of reducing universal credit, pump it up and give people more income that way. Okay. So, and maybe perhaps then people will start to reallocate to create jobs which are more relevant to the day and age we are now and to the changing economy we are experiencing.
Yep.
Yeah. And let the free markets do the magic.
Oh my God, you sound like Adam Smith there. All right, so let's move to the next article now. and this is about why we should start taking young investors more seriously. What I hear my dad say all the time is, back in my day.
Yeah.
Well, this is my day, Dad. If you're watching, this is so now let's start investing for our future.
Yeah.
Let's look at the article now.
This topic is called Young But Not Dumb. What do you think? Young But Not Dumb.
Well, I mean, it's a positive.
Is it an insult?
I like the young bit. I feel like I've been using a lot of my cocoa butter recently, so I do look young and not dumb. Again, a positive. I love this article.
And this is a defense of millennial investors by The Economist. Recently, we are in the lockdown, and millennials, those who are born in 1981 to 1996, are classed as millennials. So we are one of them.
Yeah.
And basically, what they have been doing is during the lockdown, and it's been a trend that they started investing in stock market, and they don't take the route that investor would normally take. The approach is quite different, and let me give you an example of how it is different.
Okay.
For example, here, millennials piled onto Hertz after they declared bankruptcy. And another one you might find this one interesting is that they play with derivatives and bid up the share price of Nikola. It is an electric lorry maker that later admitted that letting a prototype roll down a hill during a demonstration because it could not have powered itself.
What?
Yeah, so they invested in a company which
doesn't know how to make a lorry work.
Yeah, that the lorry couldn't get up the hill. So
oh my God.
That is not a...
Well, this isn't promising.
It's not. And after this example, how would you take those millennials seriously? You know?
So these investments that millennials are making, is it just random? Is this what you're telling me?
I don't know. I don't study their behavior, but there has to be some rationale behind these investments. But the sure thing is that it's about to change, and their views might need to be taken into account, because one reason is that they are going to inherit a substantial amount of assets from baby boomers, because as countries go through the population cycle, unfortunately, baby boomers will enter a later stage in their lives and unfortunately die. And these millennials are likely to inherit quite a lot of money. And currently, they hold 9 trillion compared with 60 trillion that baby boomers hold.
Wow.
That's a big statistics. And millennials will inherit 22 trillion by 2042. Are you inheriting something, Sam? Should I know something?
I keep these information close to my chest, Rob. None of these is disclosed. But this article looks really interesting. They talk about how shifts in technology, how much you can control your pensions, pension policies, has actually impacted the way that millennials can now invest. Yeah. So obviously with technology, we have all these different companies, Trading 212, eToro, where you can actually do practice trades, so you can actually learn on the go, which is really interesting. We know that it costs some money to pay brokers to trade on your behalf.
That's what it used to be.
Yeah, to execute a transaction, you need to pay. You would have to pay
quite a substantial proportion of your investment.
Exactly. So
of the price,
So now with the advancement in technology, that's no longer required. The advancement in technology, the changes in regulation means that actually it's good. It's a good period to be a young person and an investor.
Yeah.
We also seen as well something that we have to consider. We say this improvement in technology makes life easier. We've seen that financial markets have become more complex.
Of course, yeah.
So that could be a problem. There's a lot to learn now, especially in the derivative market as well. Yeah. So that could make things more complicated for the millennials, and this is something that they will have to look into. But I think they have good grounding. These new
something that they really leverage on is advice. These robo-advisors, which automatically allocate investments across low-cost index funds based on age and risk preferences fees. Wow. And these are really low fees. And these millennials really make use of these. So this is something unusual, something different than what baby boomers do. One reason is that the pensions that baby boomers had, they were defined benefit, whereas now we mostly have defined contribution schemes. So where savers have more control over where their cash goes, so they decide whether to invest in equities, bonds, or how to build their portfolios.
That's huge.
Millennials, they try new things, technology, and it is important for these companies to really cater for
adapt.
For the way they do things,
Yeah, we can see Morgan Stanley.
Yeah.
They've bought Solium, which is a startup. We've seen Goldman Sachs purchase United Capital, which is an investment advisory firm, which is really popular with young people already. We can see that they're already preparing for that future. This isn't widespread across the financial services industry yet. So, but I think we're going to start seeing some of the large banks investing in these platforms for young people. Yes,
and it's really important for these companies to take a step forward because not all of the financial industry is prepared, and they need to be, because this might happen more. This might happen faster than we anticipate. And one of the biggest question here is the investment, the purpose of the investment is likely to be different than what baby boomers had. Millennials are more concerned about the corporate social responsibility of businesses.
Wow.
They're likely to withdraw their investments from companies which do not act in this way. So it's important for these companies who are taking steps to build better future, to build it in the right way, reduce the carbon footprint and really bring value to the world. And
that's important.
Yeah, and it's time to put the jokes off. We need to start taking these millennial investors seriously because eventually they will change the asset management industry.
Okay.
Yeah.
Right. Now it's the fun part.
Yeah.
This is what we've been waiting for. So let's go into some funny articles. Have you ever hugged a cow, Rob?
What do you mean hug the cow?
You haven't?
You mean milk the cow?
No. I've not milked a cow, but have you ever hugged a cow?
No. Why would I do that?
It's perfectly normal. If you're feeling stressed, you should be hugging cows, according to this article. So those who do the cow hugging start by taking a tour of a farm.
Yeah.
And then they get to hug a cow for 3 hours, up to 3 hours.
Oh, that's a bit longer, isn't it?
No, it's perfect time. I think it's 3 hours, maybe even too short, actually. Because sometimes you need to relieve that stress. And
I'm getting to more know about you as we do more of these things,
Yeah, this is what I do every weekend. And the cow's warmer body temperature, slower heartbeat is believed to promote positivity and reduce stress by boosting oxytocin.
Wow.
That's a big word. Oxytocin in humans, and the hormone released in social
Why
bonding.
don't you just hug a dog or a person?
It's weird. People hug cows instead, mate. You know what you've been doing.
You know what? I'm going to believe you on that.
Yeah, so, speaking about hugging cows, speaking about feeling stressed, we have someone who just started a new job.
Nice.
Started a new job, got a new job, and it all goes terribly wrong on the first day. So this has had 11 million views. I'm just gonna play it now. Well, this guy here, he's just started his job, and he was meant to do a temperature check on this kid, and he ends up spraying disinfectant into the kid's eyes. Incredible. It's just like...
Aren't you meant to put disinfectant on your hands?
Yeah, you are. So the guy who's just started the job actually...
Maybe he's taking coronavirus too seriously, don't you think?
Oh, maybe he's doing what Donald Trump was saying, where you inject it, but finding a different way to inject it inside through the eyes. Maybe that's...
that's conspiracy theories, man.
To be fair, what we can see here, it looks like he made a huge mistake. He was meant to do a temperature check, and then he sprayed a disinfectant.
It seems like he mixed it up. He mixed up the hand sanitizer and thermometer.
It happens. Sometimes you have these reflexes. You pick something up you weren't meant to pick up, and you start using it, start spraying it into people's eyes. You know, it happens. It's not a great thing to do, but
hopefully that was an accident.
Yeah, I'm hoping the kid's fine. Looks like it was the kids all okay afterwards.
Yeah, always spray the disinfectant on your hands.
Yeah, always.
Eyes.
Yeah,
not in your eyes.
That's the moral of the story here.
Yeah.
Okay, right. So that is the end of the session, the show today. Again, a huge thank you for you guys joining us. We've really loved having you. Please don't forget to leave a comment, like, subscribe, and hit that bell notification. We will be coming up with another show very soon, and we hope to see you guys soon. Thank you very much.